Welcome to the YFP Real Estate Investing Podcast. I'm Nate Hedrick.
And I'm David Bright. We're both pharmacists and real estate investors that believe that real estate investing does not have to distract from a meaningful career in pharmacy.
Each episode, we share stories that educate and inspire pharmacists to leverage real estate investing as a part of your financial plan. Hey, David, how's it going?
Hey, good, thanks. How you doing, man?
Good, really good. Just got off an excellent interview, and after last week's episode about going part-time in real estate investing and really full-time in real estate investing and part-time in pharmacy, we wanted to bring in someone that has actually done the full switch. Like, what does it look like to be a full-time real estate investor, no pharmacy whatsoever? And we had someone from the past that we were like, oh, why don't we call up Dylan? Dylan Koch is fantastic at this. And we had him back on episode 68, way back in season 1, and just thought he'd be a really good fit for this.
Yeah, it was fun to talk with him again as someone that's done this whole process, right? Started off in full-time pharmacy, started off working a bunch of overtime, trying to get in better control of his financial picture, and then slowly going down to just full-time, and then going to part-time, and then finally, at some point, stepping away from pharmacy as real estate just turned out to be incredibly successful for him. And so it's just this interesting transition to watch him walk, and not in a way that I don't want this to be a discouragement for people in pharmacy. I think he talks about that transition, why it was a fit for him, and it's not going to be a fit for everybody, but it's just fun to see someone find that passion, hit that passion, and go hard after it.
Yeah. What I like is that he doesn't just talk about how it wasn't like he walked away and now he sits around all day and lounges at the pool, right? Like, he's working hard at a business, right? He is really doing a lot of work, but in a different field. And that's an okay thing for him. And I just really like that he's realistic about the requirements, realistic about the day-to-day. That's really refreshing. I think there's so much out there about you just do real estate and then you retire and it's easy. And it's that's not actually the case. And this is a real person doing it. And here's what it actually looks like. And I really like that.
Yeah, I like how he talks about so much that he transferred from his pharmacy training and pharmacy background that's able to help him too in real estate. I think we tend to think of there's so many things that are so niche in pharmacy, and how many people are going to know imprint codes and things like that. There's things that aren't going to transfer, obviously, but there's so much that does. And he talks about some of those skills and lessons and character traits and resilience that he built as a pharmacist that has helped him to be really successful in real estate as well.
Yeah, I think it's great. So if you've been thinking at all about, hey, what would it look like to just do real estate for a change, or just do a side hustle, or leave pharmacy altogether? Well, we're not promoting that. We still like to share the full story. So I think Dylan gives a really good vision of that. And again, hope you guys enjoy it as much as we enjoyed talking to Dylan. Here you go. Hey, Dylan, welcome back to the show.
Yeah, guys, thanks for having me. Happy to be back.
It's great to have you. We know that we last connected. We last did in the show, almost 1.5 years ago, episode 68, way back in season 1. I guess, why don't we just jump right in? What have you been up to since then?
Yeah, it's been a lot of changes. And so, previously I was just contemplating getting out of pharmacy. And to set the tone, I graduated in 2017, but then fast forward in October of 2022, I actually left full-time pharmacy, kind of stayed on PRN, and I haven't worked a shift in the pharmacy since February of 2023. So It's been almost a year.
And so obviously during that time, running as a full-time real estate agent, full-time real estate investor, tell us a little bit about what that looks like today for you on a daily basis.
Yeah. So basically I have my agent's license, but I don't use that a lot other than listing or on flips. And a lot of my day-to-day is we do a lot direct to seller marketing. And then it's kind of on us to figure out what that exit strategy is. So a lot of it is, to be honest, most of my day is spent on the phones calling sellers. That is the most of my day. But other than that, it's managing flips, it's data management, managing our current rental portfolio, and then whatever flips that we have currently going on. Nice. We did, I think, 5 or 6 flips last year, which they're time intensive too. So.
Are you doing a lot of the work yourself, or are you hiring out contractors for most of that?
I'm not a handyman by any means. Now, don't get me wrong, I've learned a lot doing this, but we hire out mostly everything when it comes to the rehabs.
But see, that's good because I think a lot of people hear like, "Oh, I run the flips," and they think, "Oh, he's probably swinging a hammer out of every 8 hours." And like, you don't have to do that. Like, that's not
Nope.
a
I just kind
requirement.
of show up on the job site, make sure that we're on the timelines that we're supposed to be, that the work's kind of getting done. And at the beginning, man, like when I first started this, I didn't know the difference between like a plaster wall and drywall. So
Mm-hmm.
I'd have to get someone I know to come in and like be like, hey, is this actually being done correctly? And so I've come a long way in that regard, but I'm definitely not the one with the tools.
I love it.
No, I feel you on that one for sure. If you see me swinging a hammer in a house, we have something wrong. That's for sure. So,
Yeah.
as folks that listen to the podcast regularly know, one of the things that Nate and I talk about often is that you do not have to leave your full-time pharmacy job in order to have meaningful time spent with real estate investing. At the same time, we also know that some pharmacists really enjoy splitting their time between the two different careers, between pharmacy and real estate investing or other things. And you've swung that all the way full time, but you did it in this interesting way where you went part time for quite a while, and you did it with this kind of PRN approach to picking up shifts. I would imagine that there's something there that pharmacists with this inner desire to have strong safety really like, because it just feels like this warm blanket if I could jump back into pharmacy if I need to, right? If you're making that
Right.
transition. But I'm curious how that went for you. Do you feel like that was a useful part of your transition? Do you feel like it held you back? Or if you had to do over again, would you do it differently?
Yeah, great question, and I'll try to answer in a multitude of ways. Um, so everyone's situation is obviously different, and I consider myself very lucky in the fact that I was young. I think I was 29 when I first like decided to go full time. My wife and I didn't have any kids, and my wife is also a pharmacist, right? And we purposely also lived well below our means with our combined incomes, right? And so we were in a financial position where we didn't really have to worry about my income if it went away. I was able to use her benefits, as a like health insurance and whatnot. And it was kind of like, we want to start that. We want to start family planning. We want to start doing these things. So it's kind of like hey, Dylan, it's either like a now or maybe almost never kind of a thing. And so we just decided to kind of go for it, and the rest is history. And, I don't know if I touched on this previously, but in my first 3 months, in direct to seller, you send a lot of mail, it's expensive endeavor. And I went like three or 4 months, and spent close to $30,000 in the business. And I hadn't done one deal yet. And so it was almost like a what the hell did I do kind of a situation.
Oh man.
But at the same time, like I'm going to keep my licenses active. I don't think I'll ever not have them, as kind of a safety net, if things do end up going south. But luckily we've been very fortunate since then. Did that help, or what else would you like me to hit on in that
Yeah,
regard?
no, I mean, I can feel everybody's like gasp of stress when you say that you spent $30,000 on marketing and saw no revenue come in from that right when you walked away from a full-time job where you had that steady W-2 income coming in. So
Yeah.
I feel like that is that mountain of stress, and I can definitely see why having your license there would help. But it does sound like that jumping open doors to different business strategies. Like I'm assuming that you wouldn't have done that much direct mail if you didn't have time in the day to chase those leads once that flow started coming in.
Very good point, David. And because people kind of ask me that, like when you get started, what you do, and I always say direct to seller is great, because at least in my market, the MLS is few and far between for deals right now. Um, but if you send out the marketing and the people call in, you don't have time to answer that phone call, you're basically setting your money on fire, right? And like because you need to wait, also convert, those leads, or it's just not going to be worth it, I guess is what I would say, or have some dedicated time to do that. And to the point you just mentioned, like pharmacists like safety nets. And I think our schooling and our training prepares us like, everything has to be perfect because like, nothing can be wrong in a prescription or someone's health chart. And in entrepreneurship
Mm-hmm.
in general, but it's like real estate investing with flips and stuff always comes up where it's almost like you have to figure it out and go with the flow. Like it's almost like a 180 from the pharmacist approach. And it took me a while to like get over that because I would have to be the perfectionist, and it would cause probably undue stress that I was putting under myself or something like that.
Yeah, I really like that idea of like the safety net. There was podcast I listened to a while ago that it's called All the Hacks, and it's a great show about like travel benefits, and he has some really good guests. Anyway, and he talks about when he went full time into the podcast world and how like scary it was. And he said the 2 weeks before he decided to make the jump, he signed up to drive for Uber and like drove for a whole weekend just to see what it was like and how much he could make as like his fallback, right? It's like, if this doesn't work out, I can always drive for Uber, right?
Yeah.
And I get pharmacy is a pretty darn good fallback. Like if you had to fall back on something, like that's not a bad place to be, right?
Yep. And I think I heard it on a bigger podcast a long time ago. And they asked someone the very similar question. And his response like kind of stuck with me. It was, my worst case scenario is going back to the job I was just doing. Right. So it's like your worst case scenario is almost the job that I'm doing now. And you kind of frame it like that. It's like, okay, well, why not kind of take the leap and at least give it a try? And that's the biggest thing I think for me personally is I would have just stayed full time. I would, in the back of my mind, I would have been like, what if I would have went to it? What if I would have gone for it? So at least now I can answer that question. Even if I would have fallen flat on my face, I would have known.
Yeah, I love that. I think that's huge because I think most people, when they envision like the worst case scenario, they jump to like, I'm homeless and I have to sell my car to like, to eat this week. And like, that's not the case, right? Like you would set yourself up in a position of strength financially so you could make that move. And if it didn't work out, you had a great fallback. I think that's
and
really key.
Who follow your show, they probably at least, have an idea of budgeting, right? And so we knew what our 6 months of expenses were. And so we kind of had that set aside before doing this. We're like, basically, okay, Dylan, you got 6 months to figure this out. Like, on top of everything else. And that seeing the numbers is what helps me. And I feel like a lot of pharmacists are very quantitative, like seeing that kind of stuff. And that's what helped me do it. And it helps me even when analyzing real estate deals today. It was like the numbers are pretty objective.
Yeah, I like that a lot.
Yeah. Speaking of quantitative, one of the things we've been talking about in the last couple episodes is tax strategy in real estate, because it's the beginning of the year, right? This is when everybody's in tax mode. And we just talked on our last episode about real estate professional status in taxes. We talked about how once you make the jump where your pharmacy career is no longer your primary and you're spending more hours in real estate and several other thresholds. If you want to get into the weeds, rewind back to last week's episode and you can get into that. But as far as how did that pan out for you, some of the tax strategy to go along with this business strategy of wholesaling and other real estate activity?
Right. And so obligatory, like, consult your CPA or whatever, but
yeah.
Wholesaling and flipping is considered like ordinary income. So just like, so that's depending on how much you make, you could be in a very high tax bracket. And then obviously if you're married, your spouse or is a pharmacist and make decent money. But we were in a position, I guess, all through it would have been 2022 tax season, right? Where in 2023 we filed where we would have had to have paid, I think it ended up being about $40,000 to the IRS. But because I'm a real estate professional and we can take our active losses against our passive, is that right? Our passive
losses against active income, right?
Yes, against active income. And I could take against my wife's income too. So we kind of lowered her tax bracket down. We ended up getting from owing 40 to getting a check for $8,000 back. It was a pretty big swing from the power of that. But I want to caveat that is a lot of that was bonus depreciation via cost segregation from a lot of real estate that we bought that year. Yeah. This upcoming year, we won't have those same benefits because we didn't buy a whole lot of real estate in 2023 when interest rates went up a lot. Right. And so it can have great things, but you are also putting yourself on a treadmill almost of continuing to buy real estate to see those big gains, like those really $50,000 plus movements.
Yeah, I think that's huge. And that's something that we talked a little bit about last week was just how you have to get it right and you have to do all the right things. Like you said, you have to buy real estate for it to depreciate, for it to count. And so, yes. It's not just this one size fits all model. You have to actually follow the right rules and do the things the right way. But it can be lucrative, like you just described, right? 100%. You can have a great year where you're not paying anything. So yeah, and again, as a 1099 employee for my real estate work, I fully feel that, right? Because the tax bill comes due at the end of the year, and the ability to not have to pay that and actually might even get money back that's about as good as you can get.
Yeah, and you can get very advanced, and our CPA that we have here is very good, and that you can go into strategies. Like, okay, well, on 2022, you guys didn't make a whole lot of money on paper. Now you have this traditional IRA over here. Why don't we move that to a Roth? Because you're going to pay the taxes on that income bracket. So your conversion switch is at a much lower tax bracket than it normally would be. Right. Yep. So you can get into like these more advanced kind of strategies when you do that kind of stuff too.
Yeah, I love that. Definitely get the accountant on board. That's good. What about your investing, like your actual business strategy? Has that changed at all since you've gone full time, or was it just the ability to do it at a higher level?
It was, so the overall theme was I like investing more than anything else. I wanted buy and hold rentals, whether it be, at the beginning was single family homes because that was I knew, to small multifamilies. And eventually I wanted to own larger stuff. But everything like on the MLS, I was getting outbid or like I couldn't make the numbers pencil. So I was like, and I signed up for these courses to learn direct to seller marketing. And basically these leads would come in. I'm like, okay, well, I don't really want to own in this part of town or et cetera. And so instead of just wasting those dollars, it was trying to find a way to monetize, those leads to come in. And then being in the real estate space, you meet buyers from other people. And just because you don't want it doesn't mean that someone else doesn't want it. And so now the thesis basically is wholesale or flip things that, I don't want to keep purposely for a high active income, take that high active income and buy and hold stuff, whether it be the BRRRR strategy or like, we're buying a 13 unit place next week. That would be just like a traditional buy. Right. And so like, but it's the lead flow that's most important. That top of that filter are the leads, right? And everything else below that is secondary.
And do you do most of the investing locally then, or is this in multiple markets, or is it all nearby?
It's all in Cincinnati, Ohio. Yeah. And I live here. I've been here since 2011. So I feel very comfortable in this market. My own opinion is my back door is also an area that the numbers still make sense. If I lived out in California or something, you'd have to do the virtual stuff, but I'm just fortunate for where we live.
Yeah. All three Midwesterners on the call here. So
yeah, that's right.
People need to get on board with our cool states.
I think so too.
Well, you also went to pharmacy school in Cincinnati, right? And that's kind of how this began. You got familiar with the area, you started investing early on in your career. And so through pharmacy school, there was obviously some benefit of getting to know the area and become an investor early on. Though not a lot of people jump out of a pharmacy career quite as early as you did. I've heard people argue that, that can be kind of a waste to put that much time and effort into studying and student loans and all those things for a pharmacy degree just to jump out quickly. But then I've also heard some really strong argument that there's skills you pick up in pharmacy school and in your pharmacy training and as your work as a pharmacist that can translate very well to real estate investing. So I'm curious, I know I'm biased in that, but I'm curious what you find as your as skills that transferred from your pharmacy world that make you a really strong investor.
I definitely agree with that. The latter point of that, where, I mean, going through pharmacy school, at least for me, it's difficult. Like, so and you have to develop even character traits, like, diligence, doing things when you don't want to do. Critical thinking obviously is a big one. And so, yeah, I would say a lot of those skills overlap and help in pharmacy. I mean, especially like anything analytical, like underwriting, for example, I feel like most pharmacists, engineers are good at. It's the intangible side things that kind of you need to balance out because, sometimes people call me and they don't use nice words. They say like, don't contact me again. It's having kind of that thick skin, which, if you're a retail pharmacist, you're probably used to that too. But also I guess your first point of like it being a waste. I don't think it was a waste. I met some of my best friends and my wife from pharmacy school, and I had some of the best memories from that time. So kind of the intangible side of things. But I used my pharmacy degree and the income that it did to put me in a good position at a young age to invest in real estate, get a good financial footing. I didn't have a whole lot of, I think I had like 72,000 in student loan debt. So I knocked that out pretty quick, working a whole lot of overtime. I was very lendable for someone my age. So I bought my first house that way. So, I think the skills are transferable. And I think if you're just smart with it, you can use that to your advantage, especially at the beginning.
No, that makes a lot of sense. And I feel like we hear that in other professions quite a bit. Like there's a whole lot of people that go to law school and then may not practice law in the traditional sense that we think of for those of us that like watch Law and Order and things like that, right? Yeah. But there's people that will jump into plenty of different careers with a law degree. I think that there's a lot of similarity in what could be done in pharmacy, although so many people, particularly in the last several years of pharmacist shortage, get in and stay into a pharmacy career. I'm curious also, what were some of the pieces of training that you found that were most beneficial to help you make that shift? Because clearly in a pharmacy school curriculum, we don't teach wholesaling, we don't teach comping residential properties, right? So how did you harness that momentum of quick learning and pick up some of these other skills quickly?
That's a good question. I don't think I've been asked that before, David. And I guess what I would say is like, this might be a more of a, I don't know. I feel like if you're a pharmacist, you have to have some kind of level of determination or something, and like, you know, like just a not give up attitude. And a lot of stuff I learned, you know, there was some mentors in there, but it was a lot of books, podcasts, and YouTube University. And then the school of hard knocks. So, and you know, I think that's the biggest difference is you don't really have a lot of trial and error in pharmacy because you kind of need to know the answer going in. But in real estate, there you can have some screw ups and still figure it out. Right. And so I think the biggest thing, I guess, that helped the transition was just a personal attitude of I'm going to figure this out. Really, again, diving into the numbers, I feel like is not to be underrated. I know I've said that already, but it helped me once I see it on paper and I'm like, this is my worst case scenario. It helps me then take the action forward to the next step.
Yeah, I really like that. I think that helps me as well to actually see those real life numbers, and then it doesn't seem nearly as scary. So I think that's a great point to highlight. Something else you said just stuck with me because I pulled, while you were talking, I pulled up a picture that you posted the other day. And so we obviously like promoting the positive aspects of real estate investing on our show, right? We talk about that all the time, but we also like the reality of investing. And I think that's a line we like to be on top of. And you are also very transparent, especially on like social media with all the stuff that can go wrong, right? The screw ups, like you just mentioned. So you had a post the other day, and I just want to read some of it because I think it will give our audience some idea. It says the non-highlight reel of real estate. Boiler broke at the rental, $10,000 to replace. Seller lied about their rents by $2,000 a month, kills the deal. Cleaner broke a window at a flip, scheduled to sell tomorrow. HVAC stopped working in a property that was supposed to close tomorrow. And this was all in the past 2 days. Like, if somebody's reading that, right, are they just bailing on this? Like, never mind, pharmacy's great. I'm not going to complain about calling the insurance company. I'm just going to do it. Like, how do you get through all that?
I mean, at the beginning, that it would have really knocked me down, right? You know, and so it's just the more seasoned you get, it's just like pharmacy too. Like, you know, the more longer you've been a pharmacist too, the more you deal with like the pains and struggles of that. So first of all, you have to have reserves, right? Always operate on a position where you have reserves that you can dip into if you need to. But it was just almost at this point in like doing this for, I don't know, 18 months full time. It's just another day. But at the same time, I will say, because I've done this and I've built the network, at the beginning, if you don't know the people to fix those problems, that's when the anxiety comes in.
Yeah.
Right. And luckily now I have the Rolodex of people I can text and call, and 2 or 3 of them, they can be like, hey, this is what happened. Here's the lockbox code. Can you handle this for me? And it can get done pretty quickly. Right. And so it's just having the resources to take care of those issues in a manner. And once you've replaced a couple too, you know how much stuff this is going to cost too. Mm-hmm. So it's not like a sticker shock that you might get if you're a little bit less experienced.
I like the analogy you made to being in the pharmacy, right? We do the exact same thing working, just pick retail pharmacy. Like when something goes wrong, right? Oh, someone needed this medication, but they're out. Like you just go into like, okay, well, these are my resources. These are the things I'm going to tap into. Here's the person I'm going to call. Here's the pharmacy I can send them to that's open till 8. And I know the guy and he's always got blah, blah, blah in stock. Yep, like exactly. You have your plan. It's just when it's in a totally different field than where your training is, it can feel overwhelming. But what you're saying is you get that training. Like you just go out, you do it, you learn, and then it doesn't become a big deal. Just like every day pharmacists deal with problems that are gigantic, but don't freak out. They just handle it, right?
It's the unknown that creates anxiety.
Yeah.
Right. And so if you have those resources in your back pocket, you eliminate a lot of that.
Yeah. And money fixes a lot of problems. So having a few extra dollars saved up definitely helps.
And don't get me wrong, like I wasn't happy about the situation. Sure. But like it's just the fact that happened then is just like kind of, you know, we'll deal with it. But if that would happen at the beginning of, right, but I didn't have all those properties at the beginning either. So it's like, you know, the size almost creates the problem. I don't know.
No, I often tell investors that I work with, the first year is the worst year and the first one is the worst one. Even if the
Exactly.
deal is good eventually, it's so hard because you're starting from dead stop to like, okay, I hope nothing goes wrong because all of a sudden I'm just going to lose money. So you're spot on. Like once you have that built up, it's a lot easier.
Yep, 100%.
Yeah, I know you've also described how kind of built up this tolerance to a lot of things like that by doing this while you were a full-time pharmacist, picking up overtime, right? Like you were working well over 40 hours as a pharmacist as you got started into this, and you kind of eased into this slowly so that, your first eviction, I'm sure that was a nightmare like it is for all of us. And then,
Mm-hmm.
a few more in, like it doesn't become quite as much of a thing, right?
Right.
First time the furnace goes out, first time the this and the that. And so as you find that tolerance that develops over time, do you recommend that people ease into things as well, or do you think that you can still develop that pretty quickly if you just made the jump?
I think you can if you made the jump, I think it's feet, like learn by feet to the flame kind of a thing. Like I think if you put yourself in that situation, you're going to become adaptable and figure it out. But that goes down to like, not a lot of pharmacists I know can probably do that just from their personality type. That nothing I'm saying there's anything
Yeah.
wrong with that, but that slower transition is usually better suited. And I'm actually a fan of that disc profile test. I would recommend like your people come out and take that too, and like figure out where you actually fit in that, because that's going to give you a lot of. I enjoy underwriting. I don't like tenant management, right? And that's some of the work what I do too, right? And so I manage my own portfolio now, but now that we're getting a little bit of size, like that's my next thing. I'm going to offload a lot of that too. So, did that answer your question? I kind of rambled a little bit there.
Yeah, no, I like that a lot, and it takes me into my next one as you talk about unloading your management. What is your goal for the next 6, 12, 18 months, and how are you reacting to this shifting market that we're in? As interest rates are hopefully coming down, as the
Mm-hmm.
market might start to unlock with volume a little bit more, what do you see as far as your business strategy for the next 6, 12, 18 months?
It probably won't. I want to buy more real estate this year, and rates are down from that were in 2023, so I think that'll make that easier. And so I want to get to a point where I want to own 100 units. Really is what it comes down to. I don't know if I'll get that in 18 months. We're after we have a closing here on the 9th, we'll be at 41.
Oh.
And so, but I'm starting to target higher asset classes, and still in residential, but like 20 plus unit buildings that are a little bit higher size instead of the single families, small multis. So I will still market to that for the active income side, because there's always buyers for single family homes or small multifamily homes. So that'll be like either the flips or as an agent or wholesales or whatever. But then personally, I will start to get we're under contract for an office building, hopefully at some point too. So it's just different asset classes, but a little bit bigger of deals. And the strategy won't change. It's, pulling the list, sending out the mail, introducing myself, having a good brand and reputation here in my local market, and just kind of continue to underwrite and contact sellers. I think if people do this at home, not to go on a side tangent, but if they send out 100 postcards, handwritten letters, don't expect to get a deal out of that. I think it takes a lot more volume than people realize, especially at the beginning.
Yeah, I can totally see that. David and I tried our hand at wholesaling for a little while, and the sheer volume
Yeah.
was a lot to deal with.
Yeah, no, it's a lot, and you got to field a lot of phone calls.
Yeah.
Mm-hmm.
Yeah, you have to be available for those phone calls too. That was one of the other things we struggled with too with wholesaling, was that you, like, when that seller calls, if you don't take that call, you might miss that whole deal, right? So you have to be
100%.
available.
He's
And
calling the next guy that just sent him another mailer. Yep.
exactly. Yeah. So that's
Mm-hmm.
cool. So I guess we'll wrap things up. I mean, this has been awesome. It's just so nice to get a pulse on what you've been up to, and what it might look like for somebody to step away from pharmacy and do this full time. So what advice do you have for people who are maybe feeling a little stuck right now, feeling burnt out? Maybe they just want to take a step back from pharmacy. It doesn't need to be a full leave, but maybe they want to take part-time as an option. Like what advice do you have for somebody that's starting to work that direction in terms of considering real estate as an option?
Yeah. I would say first and foremost, like, do your budgeting, make sure like you guys are in a good financial position for something
Yeah.
like that. But really, I would try to find someone local to you, whether they're another healthcare professional that has real estate investments. That's me here, you guys in your local markets, or even go to a real estate meetup. meet people in the space and be like, what do you do? What's your day-to-day look like? And talk to 100 different people. And then in my experience, if you come with a genuine attitude, a lot of people will give you the time of day to like, hey, like, if you want to get started this, I will help, kind of a thing. They're more than willing to give their time up for something like that. So basically tap your toe in with experience, right? I think experience is going to solve a lot of those problems.
Yeah, especially it sounds like when you get further on, like you said, the way to solve those problems is to have the resources and the access. And so if you can start by that, developing that network, it makes the problem solving down the road a lot easier.
100%. Yep.
I think this is really exciting hearing about what you're doing. Even in a wild market, you're doing a lot of wholesaling, you're doing a lot of flipping, you're growing into different asset classes, you have creative tax strategy, you're doing all kinds of really cool stuff here. It's just exciting to see your success through this. If people want to reach out and talk with you directly about how you've done this, or maybe even ways to work together, where can people find you?
I would just type my name into any of the social media platforms, and I'm pretty much everywhere, whether it be Instagram, Facebook, Twitter, whatever. It's just Dylan, and then last name's Koch, but spelled Koch, and you'll find me.
Awesome. Dylan, really appreciate you coming back on the show, sharing what you've been up to, and just giving people some inspiration and some ideas about what they could look for in their own future. So just really appreciate your time and your expertise.
Yeah, guys, thanks for having me. This is always fun.
Thanks so much. Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard in today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with us, head on over to yfprealestate.com and join the growing YFP Real Estate Investing Facebook group.
As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content of this podcast is provided to you for informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in this podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with their financial advisor with respect to any investment. Furthermore, the information contained in our archive newsletters, blog posts, and podcasts is not updated and therefore may not be accurate at the time you listen to it. Opinions and analyses expressed herein are solely those of your financial pharmacist unless otherwise noted and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer.
Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.